Hi, and welcome to the second part of the video, where we discuss about the diluted EPS. So as I discussed earlier that there are two concepts. One is a basic EPS, earning per share, and there is a diluted EPS. Diluted EPS only and only happen when there is a potential shares. What is a potential shares? Potential ordinary shares means those shares who has a potential to convert into the ordinary paid share, like convertible bonds, notes, share options, convertible preference shares. So if these things are given in the question, it means it's a part of our diluted EPS. So diluted EPS, the formula and most of the calculation for the weighting average is same. Just they will be an additional of the convertible shares of the preference shares. Now, in this part, in this slide, they discuss about the diluted earning per share will be shown how the EPS will fall if the potential ordinary share were actually converted into the ordinary share. So actually the figure is given in every profit loss account is to show you if the shareholder who has holding the potential shares, if they exercise those shares, then how will it affect the EPS and it will reduce its value. Why? Because they got diluted, they got bigger, the denominator of the shares got bigger. So if the company has a potential shares, maybe 100,000, and they already have an existing share of 100,000. So the company has to show the basic EPS on the ordinary share, which we have solved so far in this video. And then we will discuss that how this addition of the potential shares. So for example, in future, the shareholder might exercise this potential shareholder. So we have to show this value of diluted EPS as well. It will be added up with the ordinary shares in the denominator, and it will reduce the value of EPS. So it is to inform or to aim the investor that, hey, maybe in future this might happen. So that's why you have to show this diluted EPS. Now, to determine the EPS, first of all, we calculate the weighted average number of shares, just like we do in the basic EPS. So the general rule is that once the diluted EPS is being issued, means the preference shares are being issued, it has to reduce the value of EPS. It will not increase the value of EPS. So if it is increasing the value of EPS, it means it's not a diluted one. So this is a general rule. This is a rule of thumb that you can use in your calculation for diluted EPS formula. Then they discuss about, like, to determine a diluted EPS, you need to have a potential ordinary shares, which is in future can be convertible into a paid ordinary shares. If the conversion is the optional for the entity, the conversion is probable, the potential ordinary share must be included in the diluted EPS calculations. So if it is optional, you don't know. So of course, the moment the number of ordinary shares plus potential ordinary shares are added together, what it happen, it will increase the denominator, which will eventually reduce the value of EPS. If the conversion of the potential ordinary shares to the ordinary shares are mandatory, then they have already been included in the basic EPS calculation. So we don't need to calculate the diluted EPS. Why? Because it is mandatory to pay them. It is mandatory for these shares to be convertible. But if the conversion is optional, then we have to calculate and show separately the basic EPS and the diluted EPS. Then another slide is about the different paragraphs, how we define any, starting from the calculation from the EPS, then we solve the question furthermore, how the basic EPS works, and then how we're going to top up this EPS with the diluted one. So basic calculation will adjustment for the after tax effect. Any dividend you pay will be a part of it. Any interest that is recognized to the entity for the potential share. Any changes that is the income or expenses that would be draw. So we have to make an adjustment for any interest, any income, any dividend we pay for. And of course, all this adjustment will be after tax. So anywhere we are solving this diluted EPS, so T minus 1 will be the part, 1 minus T will be the part of calculating any interest, any recognition. We have to take care of the impact of after tax impact. Another slide is about the EPS calculation. There are few slides which is given in the option. For example, there is a need of calculating the EPS because this number will add it up to the ordinary share, means the denominator, and which will reduce the EPS value. So these are a few paragraphs which this lecture slide have from the International Accounting Standard number 33. Now, contingent issuance of shares, ordinary shares issued for little or no cash or other considerable about the satisfaction of the specific condition is in contingent share agreement. So contingent issuance of the shares is normally not the part of it because there is no cash paid for these shares. Then again, they discuss about the hierarchy for how we can calculate the EPS. We need to calculate the basic EPS, then the potential ordinary shares will be discussed in that. Then those potential ordinary shares needs to be ranked from highest to lowest for the dilution. Then a trigger test will be applied to check whether or not this is right EPS. There is a question at the end of this tutorial, this lecture, and I will encourage you during the semester break. It will be kind of like assignment, although solution is given, to solve this question using the diluted EPS because it's a quite detailed question. Then the potential ordinary share will be found with diluted based on the trigger test, which we will be doing in this next upcoming question. So this is the question 24.5. I try to leave this to you, just a basic calculation of EPS, or I can just read this question. There is a question, there is a company who has a profit after tax of 1.05 million. They have a dividend of 400,000, which is convertible, which can be easily converted. Cumulative preference is there for the shares, is 200,000. The preference dividend is not treated as expense, it's a part of equity. Yeah, I invested in that. On 1st July 2018, there is a 500,000 fully paid share. There is no additional shares that have been issued. So first method or first requirement is to calculate the EPS. During the year, what happened that there is some convertible debentures are being issued, there are some options are being issued, there are some 400,000 convertibles, preference shares are being issued. So these all adjustments we need to do for the dilution. Let's see what we do for the EPS, basic EPS. So the basic EPS is a profit after tax less any dividend being paid for the preference share, which is 200,000, which we take it from here. And so the total amount is 850, that is earnings, and total number of shares is 500,000. So EPS is 1.70 per share. So in this question, we did not talk about further issuing the share or buy back the share or the bonus shares. We try to keep it very simple on the EPS. The second part, I leave it to you as an assignment for calculating the diluted EPS. And of course, I will do one question in the class, but this is very much important that you do this part B of the diluted EPS. So now I will see you in the class. We'll discuss more about this diluted EPS, and we'll solve some of the questions of IAS 33. Until then, I see you in the class. Take care. Bye-bye.